have a passion to help create efficient business offices, and that's what this call is designed to do. So my name is Burdette Tatum, and I am the CEO and founder of Tatum Accounting Services. And we are going to talk about a quick topic today, an important topic. If you don't know already, we do business office support for several communities in the senior living space. We also partner with operators to, take on some of those functions ourselves that happen in a business office, right? So accounts payable, accounts receivable, billing residence ledger, troubleshooting ledgers. We see that a lot. We've been in the industry for almost a decade, and personally, I've worked closely with a lot of presidents and business office leaders. And just seen a lot of different situations and scenarios, and so we have kind of an inventory, so to speak, of just questions and answers and things that we've seen. And in this call and in calls like it, we want to bring some of those solutions to you. So without further ado, let's dive in. So today, I thought it would be a good topic we're going to circle back on some of the spreadsheets we looked back prior to, bring out the process of showing some revenue on the P&L, but talk through why we show it in a certain way. And I'm specifically talking about, obviously, rents, but then situations where we are giving some type of discount, a recurring discount. We call it a suite rate discount, and the importance of showing that at market, and then showing a discount separately, as opposed to putting it on the books at a lease rate and not showing the discount at all. And so I think if we talk about that, but look at the P&L as we're doing it, then it'll, I'm hopeful that it'll make sense, and we can see the difference and why certain users and readers of the financial statements want to see it like that, so that we can track it. We have families that come into the building, and we're going to bill rates, but it's important that we want to show a discount at the end of the day, is what I'm saying. And it's important to show it in a certain way so that it's easy to follow. All right, so you should be able to see my screen, and we're going to dig in. All right, so we looked at this when we were talking about the flow from the balance sheet to the income statement, right? So when we're talking about in our industry, where we have a reservation deposit on the balance sheet, and then once they move in, we've drilled this over and over, but it pulls off the balance sheet and then it goes to the income statement, and it's become revenue at that point, because once they move in, we don't have to refund it. And then we also looked at this scenario where we had a prorated rent of July. This is not a full month, so obviously based on when they're moved in, the property management system is going to bill from that date. But using that same example, let's drill into, and I'm going to mess up this spreadsheet, so because it's got a lot of formulas in it, but let's really drill into. All right, so we've looked at that. The focus of this call today is, when we have a lease and we're going to put it in the system, and the lease rate is different from the market rate. Okay. Anytime the lease rate, and in this case, it's going to be lower, right? Anytime we've leasing a suite lower than what the market rate is, it's really only one way to put that in the system, though technically it can go in the system either by the lease rate. I'm giving numbers and I'm going to explain this. So say it's $5,000 a month, but the lease rate is only $4,000 a month, which means we leased it $1,000 below the market. If we just enter that as $4,000 a month, and as the move in, it hits revenue, then this is what we're going to show, right? We're going to show $4,000 a month. We get all this other stuff. Like I said, I'm going to break my formulas. And let's just zero in on this income statement right here. That's all I want you guys to pay attention to right now. When we move that resident in through the charge and all that stuff, when we move that resident in, what's happening on the income statement is we're showing that $4,000 a month revenue. We're not showing a discount, and that's the total revenue. Now the market rate is 5,000, right? We've done a market analysis and we know we can get 5,000 for that rate, but it was negotiated at the time of lease that we gave a discount of $1,000. But when you enter it like that, when you enter it as the net rent or the lease rent, you get it like that, right? And you miss the opportunity to track the discount that's associated with that, which is very important, right? Like readers of the financial statements want to see the discounts that are being given. There's certain analytics that can be run just on that, so that we can see, all right, there's a side of this story that's not being told on this P&L. And the story that's not being told is, hey, we had to lease for whatever reason, we had to lease the rate $1,000 below market. At the end of the day, the net revenue does not change. Okay. So let's do it this way. So now the way that I would suggest that it gets entered, if that same unit is being leased for 5,000 and we do the billing, I'm just showing you strictly the income statement effect. One resident, right? So we're leased it for 5,000. That's the market rate. That's our gross revenue. We will call this gross revenue. And then here, some type of reoccurring discount line. Right now in this line, we have a discounts and incentives together. Here we would show $1,000 incentive, and notice we get back to our net revenue number of 4,000. So that 4,000 net revenue is the same, whether it was the scenario of the 4 here, we don't show it, or the 5 less the 1, we get the net revenue. Okay. Now, the reason why we want to show it this way, because now we tell the whole story. We tell the whole story of we have the rate of the room, right? That's the revenue, gross revenue again, 5,000, but we gave a corresponding discount, a street rate discount. This is a monthly discount that we're giving to get us back to the lease rate that's on that lease that we were signed off on, that's what we agreed to sell this or rent this unit out for this particular resident. But showing the financials like this tells the whole story. So if I'm reading the financials, I can see that, hey, we had to give $1,000 suite rate discount there. I know what our rents are, but we had to give $1,000 discount. And typically there's a budget that we're going to have, and it'll inform us on the incentives that we thought we were going to have to have in place versus what the actual incentives are. So we know we've got a budget, and we know what the incentives can be, or what we're aiming for, and then we're able to compare the actual. If we show it the other way, we lose that ability. Again, going back here, we lose that ability to say, well, we said we had a budget for the discount rate. Where is it? Right? And all along it's been in here, but we're reducing that, and that's not how we want to show it. So in our property management system, when we go in, typically what the accounting team would do, or somebody at the operator level, is there's good controls that we want to force in the system, so that when the business leader, when you guys go in to move the resident in, and if it's not there, I would reach out to your accounting team, but the parameters to put in a rate lower than a market rate, it doesn't allow you to do that. So we have a parameter where, hey, that rate that you have to enter has to enter the market rate. That is a good control to help mitigate the chances of that lease rate being entered as the gross revenue here, and we're not showing the discount. And again, we lose a big piece of the financial statements. So again, there's an opportunity to make sure in the system, most of these property management systems, where that market rate is the rate that is forced and has to be selected, and it's a good reminder, so the business leader knows they have to go in and show the corresponding discount. And again, the reason why we force it that way, so the corresponding discount can show on the financials, and then the readers of those statements can have the full story, run the various analytics, match up against the budget, and making sure that we're tracking everything the way it's supposed to be. So seems like a simple thing, but it's very important, and it's easy to go with the thought process of, hey, the lease rate is 4,000. I'm going to put the 4,000 in, because in most cases that's what's happening, right? We have the lease in front of us, and we know we'll agree for 4,000, so that's the rent that needs to be entered. there's got to be an understanding in the conversation of, well, is this market rate or releasing it below market rate? Those are the questions that I'm going to ask if I'm the business office leader, and we want to equip you guys to ask. So when it goes to putting it into the property management system, you know how to put it in the system. And it's, hey, this is the rate of the unit, regardless of what the lease rate is. This is the rate of the unit. That's what we're going to put in. And then I know I need to put the discount in to get me back to what the agreed upon lease rate was. So my financials are whole. Okay. Very, very, very important. And it'll save a lot of questions and headache in the long run when we're looking back at financials and trying to back into, you know, what the rates are and truly being able to see. Because the other way around, one of the first questions you're going to get is, hey, where are the discounts? You know, we agreed that there were going to be 5,000 discounts for the month. Where are the discounts? And the conversation would be, oh, okay, well, we have that baked in here, and that's why we can't see it. So net revenue doesn't change, but obviously the gross is not giving us the full picture. And we kind of want the full picture so we understand and we can make quicker decisions because we know what we're looking at. So that's a good understanding to have. And it really, you know, as you're going through the system, it really will help clear up any questions that there are. So again, when you're looking at those leases, it just makes it very easy to, you know, to ask the question, and it makes it very easy to go right in and put it in the system. Because one thing that we know, and I'll kind of wrap up here, one thing that we know and work with a lot of leaders is the delays in putting the information in the system typically comes down to just kind of a misunderstanding. Whether, I mean, we've seen it all the time, whether it's a discount not being clear, there's lease information not being clear, that causes, you know, an issue, and it, you know, a lot of times causes the lease to be put aside because we're waiting to get communication back. So, you know, the better we can have those files completed and the handoff from, you know, if the business office leader is not in the rooms with the lease sign and all that, so that handoff process, the more complete that file can be when it gets to the business office leader's desk, and there's an understanding of what's what, then that's going to help making sure there's not a lag time in between. You know, we're getting leases in the door, but it takes a day or two before information is going into the financial systems, and folks looking in the system may not have the latest information. And so one thing that we found is when that information is clear and when it makes sense and everybody, you know, is operating from the same, you know, playbook, if you will, then it makes it a lot faster to put the information in the system. And then we can limit instances where we have this. Also with the training, eliminate instances where we have this going on, as opposed to how we want to show the discount show in the system, right? And so obviously this is just one scenario. I mean, say these are a couple residents, right? And we'll just do some quick math, right? So this discount, if everyone got the same amount, now we're talking about bigger numbers, and you can just stack that up against month over month. And, you know, if one month we were showing gross rates, but then, you know, a different month we were showing the lease rates up here, it's going to make it confusing. So now you're not really able to do a good comparison across the months, because, you know, at one point we were putting the discounts in, you know, commingling it with the gross revenue. Another point we were breaking it out, and it makes the financials hard to read. So really would challenge you all to make sure that you're putting in the reports like that. And if not, it'd be great to ask the question like, hey, we were instructed to do it this way. Ask why, right? Wouldn't it be beneficial, if I were you, I would say that to leader, wouldn't it be more beneficial to see that gross revenue and the corresponding discount so that we know the discounts that we're giving, right? And see what kind of, you know, response that you get, because that's typically what what we run into in the different investors we've had to report to as we've been helping with the books, is they want to see that information, because again, on the front end, on the budgeting side, they have an understanding of what budgets or what discounts they're expecting to see, and that information should be broken out. So super quick nugget, hope that's helpful. This came up on one of our last training calls. So we do a monthly training call with another group, a group of business office leaders, and you know, this came up in just working with one of the leaders, and he on a different conversation, and it's just important to understand that. And so Again, going back to what I said at the beginning of the call, being able to bring that to you, different conversations, real live conversations, things that are happening now that we're coaching other communities on. We want to bring that here, and this platform is a platform for support and question and answer. So hopefully that's clear. Be sure to check out our YouTube channel. We've got a lot of information. There's going to be a lot of good content like this coming over, and just kind of quick nuggets. And feel free to reach out to our team and talk to us. So if anything that's clear, leave a comment there. But this is going to allow you to really understand your financials more. Because look, we're not going into the property management system here. We're looking at the financials, and I'm giving you the result of it. You know how to go in and do a move in. Most of your systems have a workflow for that, right? So I'm telling you, when you get to that point where you're putting in the rate, you want to ask the question, right? What is the market rate? I need to put the market rate in, right? And then maybe on a different screen, on the next screen, I need to go in and put that discount, right? So you can work through that workflow. My objective here is to show you now what that shows on the financial statements and why you may hear your leaders telling you, no, we need to enter it like this. If you heard that, that's why. Also, once again, my name is Burdett Tatum. I am the founder and CEO of Tatum Accounting Services. We love supporting our business office leaders. We've dedicated this call for it. We are live in our support. So we're working with leaders today on a monthly basis. Support, and even my firm helps with the business office duties. So you don't just have somebody that's sitting here telling you. We're doing it in the trenches with you, and we're taking advantage of the resources that we've built from being in the space and working alongside. And again, we want to bring it to you all and hopefully help all business offices in our industry win. Awesome. Thank you so much.